that thing, look for that short. Here's that Amazon trade. I am just going to show that left elbow. That's that entry on that opening bell. Market's been open 2 minutes. We're bouncing off the initial hook. Short sellers will take first round of profits, and the first 15 minutes, these things will set up. There's the Amazon one. As we get over here and we take a look at the left elbow gap down, right here, we got the Amazon. So we know where that Amazon is on that 3 minute. We just want to keep the focus that the left elbow on that SINA trade, I gave a short out at 124.90. The high was 125. I was within 10 pennies of that. Let that be the truth. Let that be the truth. We got people short up there, 124.90. Slide that bid. The high was 125 in the volatility hook. That short on Baidu, right up there at that 137.47. That's that one there. We'll keep updating some of these things. That Google trade is strong off of that bottom originally. That's that bear. That's that bull. They're going crazy. They can't admit that they're wrong, and the trade management is on. Price action volatility will remain elevated at high levels. Let's go ahead and take a look at the price line trade, which is down 7.71 handles to the lower end of that 505. If it holds a 502.5, there'll be a quick volatility trade off the bottom. Once that volatility trade, and we're getting that caterpillar down there. We got that caterpillar right here. We're going to get below there where I had given out limit orders ahead of the market, and we're going to see where they want to make that market. Just watch that. Those numbers that I gave out there at those different tier levels, because you can see that caterpillar is down 2.6. You can see that we hold that 99.15. We didn't break it. Get on that one there. Get on that one there. You already got a teeny move up off of that 99.5. All right. Let's see how we're faring over here. This is the NYSE. There's your gap. Open ranges are right here. You can see the volatility hook. You can see a slew of nothing but what? Red. Now, on the intraday low count on the NYSE, people are getting taken to the woodshed. I mean, not on the NYSE, on the NASDAQ comp. There's that distribution live before you. We will come down and we will make markets. What are you doing there?
I'm out of cat.
All right, successful trade. Watch it hold up at a lower area, and that's burning that clutch before they do what? Beethoven it. So don't forget about Beethoven on a rollover. Now, Joy Global, which we like right here. Right here is that Joy Global trade. Had a good earnings report. It's come down to 88.5. This one's going to be a super bounce off that bottom. Look for the 87.90 area on the lower end. 88.5. It held it, but when you break that 88.25, you start working your way laterally down there where you'll get that slide, and they'll take that up off of there. So basically, now that the number is out, we're going to be watching this intraday low count. Let's see what's on the intraday NASDAQ high count. Oh, boy. Your little high counts, huh? How do you like that, huh? All red. 6 minutes into the opening bell. Low count. Let's go to the NYSE. Let's get down to the NYSE intraday low count on the opening bell. Caterpillar's there, Mosaic, FCX, CMI, all the stocks that I gave limit orders, Deere, everything that I told you over there. Yeah, you can tell the type of back to make it a market. Now, AGU is down there. You can see the slew of the intraday low count is burning at full throttle. Price volatility is to take them off the bottom, to that higher level, but then roll over Beethoven. Once you get that left elbow gap down, you got that potash. There it is, right? It's in my sights. Yep, no, I'm not dealing with that one there today. I'm going to deal with your ass on that overbought GameStop. That's right. And get over to the RTH holders. Intraday low count, NYSE. You can see where the low counts are. You can see where the distributions are. There's going to be a lot more going on On that opening bell jobs report, I got the Dow Jones Industrial Average. I've got nothing but a slew of red. From an overbought market to bring these markets down, and bull rallies have corrections. And today is 6/3 of 2011. And not only that, my friends, we are just in the beginning of where markets and bull rallies, where people can get washed out. Margin debt needs below 13 handles, 1,300 on that S&P, down 14 handles. That Dow, you can see your numbers. This all within less than 10 minutes of that opening bell from that jobs report number. What I will tell people is that this Dow Jones Industrial is distribution. Let's take a look at the Dow Jones Transports. A slew of red on the opening bell. Here are the names. But then again, let's get over to the utilities. Utilities are getting smacked. But more importantly is, let's take a look at the Dow Jones Internet Conference. Your Ameritrade, your Amazons, your CIMs. Look at here, your Google, your Expedia, your Blue Nile, your Priceline. All red on that opening bell. Price volatility is to trade off that bottom. That's where the short sellers cover. They take a round of profit, then they start shorting up at the top, going in on that second style of that trade. That Rio Tinto hit my 66.50 area at 66.43 was the low there. Let's get over here to the financial energy complex. Let's take a look at that gold and silver trade that everybody loves. Will be some good buys off the bottom. Right now, we got distribution there. And that commodity, we got a slew of red across the board. And the natural gas, well, be some good trades in here. All red on the opening bell. And the oil, let us not be in denial. I'm seeing nothing but distribution. That'll teach that bull to be exuberant. I've got nothing but slew of red right there. And the Deutsche Bank Energy, Morgan Stanley Oil Services, I've got distribution. And the oil services over here on that opening bell, I've got nothing but the distribution. Once them sellers are taken out, you're going to want to trade off that bottom, take that thing up higher and sell it for a quick profit. And a lot of these good names, that's how this volatility in the actual ranges, that fertilizer that we talked about, you got your potash, you got your mosaics that are going to get support level, because that's where people want to be. On the other hand, I'm moving right over to the Morgan Stanley consumers, and they need to be whacked. That's at CMRX. That's on the stockmarketfunding.com homepage. Once these things work their overbought levels off, then we can see where we're at. Let's go to that bloated retail that we put out for a month, that these stocks will correct. They are the place to be short, right along with the retail holders and the Morgan Stanley cyclicals. You've got a slew of red in the first 10 minutes of the tape. Once these sellers clear out, then the volatility will come off that bottom, but then you get long, but then you got to be a seller. And the thing of it is, it's a roll up, roll over Beethoven. Now, when I get into the transports over here on the Dow Jones, they're all getting whacked right across the board, all within the 15-minute area. Here you go. NASDAQ, the TRANX, $, NASDAQ Transportations. I am seeing broad-based distribution as it should be. Trading volatility is that they hit that bottom. It's time to get long off of those bottoms now. Okay? Because there's going to be price volatility. They're going to take the bad news and try to wind that short. As the shorts gang up, that's when you're going to want to get long, because they're going to have to buy to cover, because most people are always shorting at the bottom, and that's when you get net long, and we'll be going over that. Right now, we'll continue to go through here. Another thing, in the financial services, in the S&P banking, I've got a slew of red. Sorry, can't be having that. Security broker dealers, all red. Goldman, Morgan, in here, leader is bouncing off the bottom. Why would Goldman bounce? You guys were taught yesterday that it was oversold. So there are certain stocks that have gotten so oversold, like Goldman, where you do get those bounces. Okay? And you do. We got another short trade coming in. That SINA, we already made it. It went long. Those ADRs trade totally different than U.S., and as they take that thing up there, they hit that 126.85 handle, and they're print right up there. That one's going to be falling. So you other guys stay on that one there. You did good on the first part. Let's get into the gaming index. I've got a slew of red. WYNN is the one that we like in here. Okay? And they'll try to hold it up. But there is some distribution in here. Okay? Across the board. And the thing about volatility is, on that left elbow gap down across the board, you're going to come back up. That makes those long trades good to do. That Caterpillar is smoking up a 99.15. That Caterpillar was a great left elbow, closed. What was the closing price? 102. What was the wholesale entry? 99.15. We're going to take a look at the airlines.
Look at SINA, Chuck.
Here are the airlines. Yeah, that things are going to, volatility hook. Here are the airlines. Because oil's down, you got a little bit of cheese eating going on over here. There's not enough gain to think about anything. But most importantly is, I want to take a look at where the that gold and silver trade starts to come back in, and where does that bull come in. And all of this is in within 15 minutes of the jobs report. Big gap down, big gap down. You buy it off that bottom. You get into that trading range long and short. You learn how to take that bear who always likes to be a bear at the very bottom. That's when you get net long to get up at the top there now. Okay? So basically in the restaurant sector, you got some haircuts going on over here. All right? The U.S. government will give out restaurant vouchers probably next. Who knows what they're going to do. Global parts. The global auto parts sector has got a haircut. The manufacturers, on the other hand, that's your car dealers. You got Toyota Motor down slightly in here. The thing that we're going to be really wanting to take a look at is where the food processing stocks are. This is the food processing type stocks in here now. And basically, it's a mixed bag. A lot of people like to go into here at Safe Haven to park money. We've got a big left elbow gap down. We're in the first 15 minutes. I'll conclude it. We've walked around the sectors from the job report numbers. We can see how stocks bounce off the bottoms. Then after they make their range, we'll look at the top of the 30-minute hour, then the full hour. Right now the time is 6:45 a.m., 6/3/2011. Learning how to trade the opening bell, learning how stocks gap down, learning how short sellers cover, learning how they go up before they roll over, knowing where to be the buyer. Caterpillar, I featured it down there. That's a great move. Yes, it is. You don't tell me nothing. And knowing how to let a winner run is the key to success. Now, on the other hand, when we look at the 52-week low list, these are the names on the 52-week low list. So we'll be scattering around, and it's all that way. Near 52-week lows are stocks like this, right here. Okay, but on the other hand, let's go to the invert of that and take a look at stocks near their 52-week highs. There are stocks that are still up here near their 52-week highs. They're all right in here. And we'll take a look at how to take those down. Near 52-week lows, you can see them. So as we go around and we take a look at the intraday low count, we can still see where these things are. Over bloated retail stock here, Cleveland Cliffs, Apache Energy, Las Vegas Sands, Cummings, FCX trade, which I like, by the way. That came down to my 48.40, and I gave orders down around those handles. I have bounced like a New York jet, and that's that trade. And they're coming in. This is one, low volatility, left elbow to the buy side. This is all trade management. There's the mosaic right there. Those trades are going to come up off the bottom. Then they're going to sell off and roll over again on all of these names. I'm concluding the opening bell, 15-minute trade management, broad-based sectors across the board. What I will tell people here is we will let them set up. I will show the S&P 100 on the tape. Oh, that's your 100 companies. I don't see nothing but distribution. What about the S&P 500 index? Looking at it. Come on, come on, come on, come on, come on. There it is right now. First 15 minutes. First 15 minutes. I go all the way down the list. I've got nothing but a sea of red. On the mid-cap 400 that we always talk about on that opening bell, that mid-cap, here it is. It's on the website. I got nothing but red. On the S&P small cap 600, SNLX, which we cover, I've got nothing but distribution across the board. And all of this is in the first 20-minute bell of that jobs report. And that wider distribution shows you where that public model is. And staying right up to that trade and understanding that everything has a range. Everything has a range. And those are your key 100, 500, 400, and 600. And that will conclude that left elbow where they roll them up to sell short. They come off the bottom. Price volatility off the bottom. Price volatility to the downside will remain in called range price action today.